All right. So now some basics, but I want to tie it back to things that we've already done. Obviously, maintain a prioritized list of your business and personal and financial goals. Well, we went through this. We did in the very beginning, we used the 3 freedoms and the core 4, body, being, balance, and business, to create an opportunity filter for you guys. That equals the 5 keys: body, being, balance, business. Body, being, balance are all personal freedom. Business is business, and then financial freedom. There's our 5, right? Those 5 things become your opportunity filter. When you figure out this is the most important thing for me to go after in each of these areas, then when I'm presented with other opportunities, I could say, if I go down that path, is it going to get me closer to achieving these 5 things? If the answer is yes, then it probably makes sense to go down that path. If the answer is no, something that we got to get better at as business owners, because we have shiny object syndrome, is saying no with confidence and moving on to something else. The Freedom Point and the Freedom Tracker are also 2 tools that you could use with all of these other professionals. Freedom Point giving you the number at which you need to sell the business, or the number at which that you could hit this. You have enough resources that if you sold, you would walk away with enough to be done, or at least for whatever's next. And then the Freedom Tracker is another way of having some prioritized personal and business and financial goals that you're utilizing on a regular basis for your decision making. So you want to make sure that you're incorporating these tools into the way that you're thinking about your business and making decisions as it pertains to your personal, financial, and business goals. Who has questions about how they can use these tools personally and with other advisors? Looks like no one's raising their hand. Okay. Tax reduction and asset protection. This just feeds on to what we were talking about in the previous slide. The way that you structure your business, C Corp, S Corp, the way that you structure your estate plan. Do I just have a revocable trust? Or do I have an entity-based financial and estate plan? In which case, someone who really knows their business takes a look at the way I could choose to hold the ownership of the various assets that I have and connect those together in ways that A, protect me from frivolous lawsuits, minimize my taxes, and create a much easier path for transition of those assets over time. So the way, that's what I'm talking about, the structure. There's different protections and benefits depending how you set that up. The right person on your team should know how to set that up for you. You can choose to reduce or defer taxes now, maximize deductions and credits. Like we talked about earlier, probably having a balance between things that you're deferring versus things that you're paying the taxes now on probably makes sense. But again, talk to your professional advisors and come up with a game plan. Some of the things for tax reduction are things that you guys are already doing, like timing of income and expenses. How many people load up on expenses at the tail end of the year just to minimize that tax bill? That's what they're talking about. Or you could push off, sending off the last handful of invoices because you're set for this year, and you'll make sure that the invoice doesn't land until after January 1, so that I don't have to realize that extra income this year. That's what they're talking about on timing. There's always charitable gifting that you can do, and then the advanced retirement planning is, what we talked about, and you're going to learn more about next week, specifically. Some of those advanced strategies, the basic level, you guys have heard of things like the SEP IRA plan. There are 401k plans. Then there's also 401k plus profit sharing plans. These are all tax deferred types of vehicles. Then you have defined benefit, defined contribution. When you start stacking up these plans, that's when the ability to increase your contribution goes up. There's some complexity to it. There's some, rules of the road that an actuary has to set up so that, you are setting aside certain dollars for the employees, which then opens up the tax code for you to set aside a whole bunch of money for you. And so I think I've shared with you guys, I have a client who went through this planning with their advisor, and they chose the middle of the road version. This is a company or a couple who owns a company where they're pulling about $400,000 a year out of the business. And now they're adding an additional, I think it's 160. I can't remember the exact number, but something like that, about $160,000 a year into their retirement account. So for them, that's a significant amount of money on an annual basis and a big percentage of their personal income. And it's because, and it was the middle option. There was another option that they could have chosen that, allow them to get, somewhere $200,000-$300,000 plus into their retirement account if they wanted to. They chose the middle route, but it's because they were doing this advanced planning stuff. The other thing that allows you to do, not obviously you could sock away a whole bunch of money for yourselves, but it's an attractive employee benefit too. Because when you're setting aside, there are certain dollars that have to be set aside for the employees. There's incentives to you as the business owner to do that. It also locks in key employees having these types of benefits. And you could set that up with, how it phases in over time before it's fully vested. So different vesting schedules. There's lots of ways to kind of put these things together so it meets both business and personal goals. Does anybody have any questions about this? Cash flow. Huge percentage of businesses fail. Cite cash flow as the one of the top reasons. Everybody on this call should know what your break even is. If you don't know what your break even is, this is the formula. You take your total fixed expenses and divide it by your gross profit. What's that tell you? It says how much revenue I need to generate to pay my cost of goods sold and have enough money left over to cover all my fixed expenses. So you'd have no profit other than the extent that your personal income, et cetera, is tied into fixed expenses. But that's an important number to know for your planning. Monitoring your income and expenses on a regular basis and adjusting, maintaining cash reserves for both personal and professional, meaning in the business, and then utilizing that budget. And if you're working with Cultivate Advisor, you should have a cash flow planning, tool or budget that you're utilizing that not just gives you to project out the revenues and the P&L, but ties that to cash for your decision making, so that you are never caught off guard when all of a sudden, something gets thrown at you out of left field. That might be take a dip into your cash flow. This we pretty much covered, so I'm not gonna spend a lot of time here. Don't put all your eggs in one basket. As business owners, we're notorious for doing that. Maintain, reserves so that you can deal with opportunities as well as obstacles, and just get liquid and create multiple income streams outside of your business. To the extent that you can diversify in things that aren't directly related to your business, that's probably a good idea, so that the rising tide and ebbs and flows of your personal core business, that doesn't necessarily impact every other investment that you have. That's why a lot of you guys are doing real estate and other things like that. The last thing we'll talk about is protecting what you have. And this is when it comes to insurance. And so there are a lot of ways to take advantage of insurance that's tailored to your unique risks. Joe, we talked briefly about captive insurance, and that could make sense for you. There's ways to find out more about that if for people who want to learn more about that. But then the basics, your typical property and liability coverage for sure. There's business interruption insurance for both income and overhead expenses. There's life and disability insurance that can be done as part of a fringe benefit for your employees, but there's also plans out there that are meant more for the owners and the key leaders, where the benefit amounts are a lot higher. They even have things where if you lost a key employee, sometimes those different types of life and disability insurance, meaning someone left the business, they didn't necessarily die, that a portion of that kicks in as a benefit that allows you to hire the next key person to replace them. There's a lot of customized coverage that's available, and sometimes it's insurance is required. If you have a lot of loans out and you're personally guaranteeing it, a lot of times the bank or the lending institution is going to make sure that there's insurance on you in case something happens to you, so that they're confident that their loan is going to get repaid. I think I added a D here, but the 5 or 6 Ds of why we need to plan for this stuff. So even if we can't imagine our life without running our business, 50% of the time, it's not going to be our timeline or our choice to leave the business. Why? There are things like death, disability, disease, divorce, disagreement, disruption. So some of these are self-explanatory: death, disability, disease, divorce, disagreement. These are all things that happen to you. Disagreement between you and your partners. Disruption is like what happened to my client when COVID shut down our business, or to the taxi cabs when Uber came to town, or any other example like that. Something that's outside your direct control that comes in and just either significantly sets back the business for a period of time or totally alters it. And you want to be prepared for that. Even if you're not thinking about selling, have a succession plan in place where you're thinking about, well, who would it be if it wasn't me? Who's got the skill set? Who has enough authority that other people will listen to them, or even has an interest in running their business? I've had it where the client wanted their son to do it. And we asked them, well, does the son want to do it? Well, why wouldn't the son want to do it? Look at what this great lifestyle has been, for our whole family. And we talked to the kid. Turns out the kid didn't want to do it. He realized he could learn a lot from his dad, and that he had the ability to, and he knew he wanted to be an entrepreneur, and he loved what his dad had built. But the truth was that the business his dad built was an old school business, a union-based business, and in the trades. And the son didn't have a passion for it. He also saw kind of the writing on the wall for the amount of expenses and challenges associated with those types of businesses. And so once he and his dad were honest about it, they figured out how to focus the internal business training on the son to focus on the half of the dad's knowledge that had nothing to do with the industry and just on being an awesome entrepreneur and businessman, to tee up the son for doing something else, his own thing afterwards. So not everybody who you think might want to have it, meaning control of your business at some point in the future, just because you think they might, doesn't necessarily mean that they do. So make sure you're thinking that through, and when appropriate, having the conversations with folks. Also being clear about how they're going to get money to buy you out, if that's what you want to have happen. Because if they don't have the personal net worth to write you a check, then you're going to be the bank, and you're going to need to be prepared for that.